Hey, hello everyone. Welcome to this week's market recap video. I am Chris with Elliott with Cafe. Welcome. I haven't done a video in about a month. I was traveling for the good part of the past several weeks. Got back last week and we made some videos for our members, but for YouTube, not yet. So here we are trying to restart this, kind of weekly coverage of the markets. While I was gone, we've had a pretty decent sell-off. You could see, that we've had upwards of 15%, 20% in some indices, but we've gotten some pretty good bounces back. And what I'm going to take you through, I'm going to take you through all the indices in the wave counts. I'm going to take a look at Bitcoin. A couple of quick, fear gauges, measures, sentiment, that kind of were screaming so loud that a pretty good bounce, was coming, that it's kind of worth watching them, especially, when kind of things get out of hand a little bit. So, let's take a look at the little wave counts. I'm still, fairly bullish this market. I think this was just, a very kind of simple, a little bit more than a garden variety correction because we approached 20%, but it was mostly due to this kind of trade war. Everything else, I think it's fairly fine. I'm not going to go into a bunch of fundamentals, but I continue to look upwards in the market, and I think we're probably working a wave two. We were expecting this. I thought we were going to make one more high before we're going to pull back in the second wave. If you've seen my previous videos, some indices did it in a very short matter, some others did not, and then we basically had some divergences, and then we kind of started to fall apart below the 50-day moving average, below the 200, and so on, and we kind of accelerated pretty fast to the downside. But we're all within normal trending. We're hitting major moving averages. We're hitting channel bottoms, and the reactions here, seem fairly, fairly normal from fairly decent levels. So if you take a look kind of on the weekly time frames, you see that Nasdaq Composite, it's hitting its 200-week moving average, and we bounced. And I put some stuff on Twitter as well regarding SOX, so the semiconductors. You look at Dow Jones Industrial, same thing. I mean, these averages, are very strong over longer term here. 200-week, I think it's like at 46-month. IWM, we broke below that, but the market is trying very quickly to kind of get back above it. So definitely we're going to have to watch this index. It's been one of the highest volumes, ever. I don't have the data purely, but from what I'm seeing here, in all the indices, the activity and the volume that happened this week and the buying that came in is very, very strong. So we'll see if this is a low or not, but definitely there are indications of that. And then, we're going to talk about Bitcoin. US dollar kind of crashed below its 200-week moving average. It seems like it could be some kind of an ABC versus kind of this rally, but something to discuss further. And then gold, just kind of closing up towards the highs, 32.36. So really quickly, a couple of things that started to kind of show us or told us that there should be some kind of a big bounce coming. Is the bullish percent index right into the super hot zone. I mean, every time this index, it's hitting between 10 and 15 towards 5. At some points it's marking major lows in the market, and it leads to at least a 15-20% rally to the upside. So far we've had a pretty decent rally, but there's still I think plenty to go until we're probably snapping back to the upper boundary towards 70 or 80. Usually that's what happens once you kind of hit it down here, and this is looking at the point and figure charts, buy signals, and obviously it's overbought above 70, it's oversold below 30. You want, if you're bullish, you want this to kind of stay above 50. So right now we're still kind of in the bearish territory, but we're going to probably stage some kind of a snapback all the way higher. And then the other one was the VIX, the forward month, versus the back month. So, looking at the 1 month VIX and 3 months, and every time it hits those high levels, again, it has a tendency to mark lows in the market. So anyway, a couple of these indicators that are very helpful. Let's go back and take a look at the wave counts and see what they're telling us. So again, Nasdaq Composite longer term, I'm pretty bullish. There's really nothing wrong here. It looks like a nice second wave pullback. I think we pulled about 38, almost close to 50% of the latest rally from the 2022 lows in here. A very nice kind of simple basic ABC. And you'll see this across the other indices. What I'm looking here, obviously, is a move above this B wave. Right there, 1820, 18281. And what's interesting is that this B wave, this level kind of coincides with, if we go here and we take a look at the Nasdaq Composite, it coincides really well with the moving averages. So you're looking at the 10-week, so that's the 50-day moving average, and you're looking at the 40-week, so that's the 200. Right? So you can see, we're getting what they're calling basically a dead cross right between the 50 and the 200-day moving average. And in previous instances, right, what happened is you're basically rallying back up to it. By the time you rally all the way back up there, although this was pretty quick, much quicker than kind of what happened back in 2021, 2022. But if the market manages to get all the way up there, there's probably going to be sellers at those points, and that coincides with that B wave. So, we're going to be watching those areas because very likely bears are going to try to defend this really, really strongly and try to see if they can push the market back down, which is possible. And then you're probably going to get something like this, right? And, then see what happens. What you don't want to do is you don't want this market to break and stay below that 200-week. So you see, it took quite a long time in previous bear market, previous correction to reach this 200-week moving average. This one happened very, very quickly. So it could be it could be the end of it, and we could start to move back to the upside. But we will be watching the zone because that's where the market will be prone to failure, and then see what happens from there. But I think the rally will probably continue until those levels are hit, and the market is going to challenge that. And those are near the B wave highs at about 18,281. And how would we label if that happens? And I'm going to show you the other indices. I'm not going to go to the same explanation because everything is the same regarding an ABC. But basically, this would probably end up, if we're failing back there, as you're going complex, and this will end up being an X wave. So you have your A, B, C, and then if you fail up there, we're going to label that as an X wave, and you can get there in all kind of ways. Yeah, it could be a triangle, it could be a complex correction, it could be an ABC, and if you're getting all the way up there to an X wave and you fail, sometimes you can even go back above it a little bit, and then you start back and you go again in another ABC. And this wave 2 then moves obviously here to the right, and only then you start rallying. So it's a matter of time. It's a matter of how the bulls and bears are fighting these levels, and nobody really knows what's going to happen, right? But that's usually from what we know from Elliott wave and from complex correction. That's kind of how they develop, right? The market is not strong enough yet to break to the B wave, creates an X wave, sellers come in, and then we go more complex, and wave 2 extends a little bit longer, which is fine, because if you look at the this kind of monthly chart in here, there is room for this to push to the kind of sideways if you want to, right? I mean, there's nothing wrong with the wave 2 even breaking this trend line a little bit and then pushing back to the upside. So again, I'm not all in for necessarily this being the absolute low, but we will take the chance and start to at least, I'm going to start looking at volume intraday and how we're closing on a daily basis to assume that this is probably done. And then if we're failing, we're just going to get out of the market. So anyway, Nasdaq Composite, then you can see in the Dow Jones, it's a very similar structure. You have your ABC. The fact that you penetrated the low of this wave A, make it less likely for this to become kind of a 5-wave move to the downside. So the 3-wave in here is starting to kind of get confirmed. If you look at the Russell, that's a little bit of a different story. I think we're getting here some kind of a flat. This would suggest, a lot of upside coming over the next several years, but it's a quick short wave if you're kind of comparing it even with the wave even with the wave A. I mean, there is a way to maybe push the wave A back here and do this in some kind of a, I don't know, maybe even some kind of a flat in a wave B. But anyway, I don't think that really matters at the moment. What matters is, how does the C wave looks if we're holding, this demand zone here at the A wave low towards 1633, and it seems that we do, or we did at least on the first approach right there. We haven't even gotten that low, and even if we kind of undercut it a little bit, and then we can begin the next move higher. And if I go kind of on a 2-week pattern, right, you have your wave 1 and then a nice ABC for a wave 2, and then we begin to rally. Okay, so that's Russell. Take a look at the semiconductors. I think this is the one that I put up on Twitter. So same thing, very similar look with the Nasdaq, and this is the one that also reacted to that 200-week moving average that you saw on my technical charts, on the moving average charts, right? So you're pulling back basically from 50%. Once we get above 55.25, I think we're up to the races. And then this here, right, it's an ABC, but it's a little bit more pronounced, right? It took a little bit longer for this B wave to unfold, and then you kind of crash down in 1, 2, 3, 4, and 5. Some people could say, well, you're not done yet. This could still be moving lower. 1, 2, 1, 2, 3, 4, and 5, 4, and 5. We'll see. I mean, if you're going to start to get back below these lows, I think clearly that's the idea. But for right now, I will give you the benefit of the doubt that an ABC it's finished. Looking at the indices, looking at the volume that kind of came in this week, looking a little bit at the relaxation in the trade war and all of that. So this could be really fertile ground for these markets to kind of start to snap back to the upside. So that's SOX. You're looking at the SPX, which is quite similar with the Nasdaq, right? Our impulse, a quick, nice ABC. C waves are notorious for being very, very sharp, and nice snapback with the weekly close near the high, which is quite important and pretty impressive. So let's see how we progress later, and then IBIT will quickly talk about this on Bitcoin instead of looking at the IBIT, although they're very, very similar. So again, we're looking for a wave 2 there as well, with a pullback here towards the 50%. So let's take a look at Bitcoin here quickly, 1 week, and then I'm also going to take a look at the XRP. But I'm sure I'm not the only one that's counting it this way. There's probably lots of other eliticians that are looking at this in multiple ways. There are several variations in here. You can have a 1, 2, 3, 4, and have a completely wave 5 already, which means that your wave 2, so this wave red would move up here instead of this wave 1 purple. That would be the top of the wave 1, and then that means the wave 2 will be a little bit deeper, possibly, right? Just in terms of a little bit of time and a little bit more depth. Although Bitcoin has been reacting very nicely from this, whatever it was, this 85 zone, I think. No, actually 75. So we just kind of came back and held these highs from last year, 2024. Those highs near 72, 73,000. Yeah, you could, if it's an extended fifth wave, right, that means that we're looking for this to be a second wave low, which is totally fine. It pulled back, I think. Let's see on the daily. I think I have that on the daily charts. We pulled back about 50% of this entire rally. A nice complex correction. Nice divergence. I'm just observing this right now between this low and this low. And then, kind of how the RSI is in here, right? So we lost momentum on the downside, telling us that this could be the end of the move, but I am truthfully going to be looking for a break above 88 before I start to initiate any positions, before I start to kind of incrementally get into the market. 88,500, a break of the top of this channel. A nice close above the moving averages. I talk about that every day in the videos, and then we'll know, hey, why don't we kind of start biting at this slowly. More confirmation we add, and then we're looking for a move above 110, and for the next leg up higher, which, if this is correct, should take us probably towards the top of the channel near 167, I guess 180, somewhere in that neighborhood for a wave 3, then a wave 4 and another wave 5, and then a completion of an extended fifth wave. I would be surprised if, there's ways to count this ultra bullish when you would go 1 2 1 2 1 2, but that's looks a bit ridiculous, so I'm not going to do it. And what was I going to say? Yeah, you could have a wave 1 here and a short wave 2, and then you're beginning a much bigger explosion in a wave 3 red to the upside, right? Wave 2s don't necessarily have to be, especially in strong uptrends, they're fairly short. I mean, there was plenty of examples of that if you look back into the equity markets too, where you're getting, wave 2. So let's just play this exercise really quickly. I'm going to delete this, and kind of let's do this, and let's go. I'm going to count it again, see what happens. So I'm going to go 1 2 3 4 5. I'm going to take this wave 3 and push it over, and then I'm going to attach this, and the software will automatically change it to a red. Okay, perfect, to the intermediate wave. Right, so that's how it would look, but that means, you're looking, down the road for Bitcoin to, really, really go crazy. Don't know if this is achievable or not, but what I wanted to do is just kind of count and look at the second wave to see what's the pullback on it. So basically you have very short, right, about 23% almost for a wave 2. All right, that means an extremely strong uptrend would come next. So I think there's a bit of a stretch. I'll keep this kind of on the back burner. I'm gonna put everything back how it was, but that's kind of one way to kind of look at that again, or in a different way. Okay, so that's Bitcoin, and yeah, if I quickly touch on it here on. Let me go on the daily charts really quickly since I'm here. I'm going to go on my Bitcoin. So this is what I was talking to the guys on Substack. It's basically, we won the market and it's starting to move back. So it's moving back above the 20-day moving average. We're kind of fighting with the 50-day. Then you have, that long 200-day moving average. So if we see how important these levels are. If we get above this, and this is it's all together, all coming together, right? The moving average is the price, these highs back here. So once you clear that zone, now you have a much stronger excitement about, starting to participate and maybe a larger wave beginning. Until that happens, we have, nice indications because we were looking at this candle, which came in pretty good volume, and I was talking to the members, well, if you're buying here, just kind of start slowly and let's start adding if things start to break, and they're starting to. But, I think a much clearer signal will be, right after we start to crack 90. Obviously then you're moving into, there is a big zone right there, so there's going to be some fighting back and forth, but, that's how the markets are. There's supply and demand. So, once we kind of clear that area as well, there'll be plenty of money to make, from 90 to, let's say, whatever, 160, 170, if we're going to go all the way up there, as the charts are showing. So really quickly back, and I want to talk about the XRP a little bit before I forget. And this is XRP. I'm not counting it super long term, just from here with the 1, 2, 3, 4, and 5. We talked about this in the previous videos there, about this equality between this wave 5 and this wave 1. At 100% it was near 352, so very, very close in hitting that. I think we stopped just shy of it. And this pullback, I don't think it's a fourth wave anymore. I think it's a wave 2, similar to the rest of the market. So if we're beginning something to the upside in XRP once again, it will probably likely be a wave 3. This wave 2 could continue to extend, right? Nobody knows how long this is kind of going to continue to drag. It seems that we pulled about 38.2%. We can play around with a little bit of a channel here. And, you know, it's hard to kind of make it very precise. I mean, you can even ignore that spike and pull it lower a little bit there. And, you know, if we're going to fail here, that means we're going to continue to extend in a much deeper correction. I mean, I've seen plenty of crypto charts that, you know, look like a correction, it's about to be complete, and then they're continuing to go and go and go lower and lower and lower, and you know, something like that, right? You're going to go here and then come back down and then like that, and then all of a sudden you're, you know, you're back near here, and you can even count it as a second wave because it looks weird. But anyhow, the signals will start to come once we're cracking above this. Above that trend line, you know, let's get above 259. You know, we'll look at some of the averages, and if this starts to go, I mean, there's plenty of upside, you know, here to, you know, to happen. One of the, you know, simplest way, I don't know if I have that here set up, you know, would be to look at the reverse fib of this entire move. And you know, you look somewhere for 427, 479 would be the first targets to the upside, you know, from kind of current levels. So you know, I think there's still a little bit of time until I would, you know, look more aggressively towards XRP for the upside. I think, you know, but things are looking good here too. All right, so thanks for watching, everyone. I hope this was helpful. Don't forget to subscribe and, you know, leave a like if you feel like it. And you know, I'm on Substack, I'm on Twitter. You see all those links below this video. Talk to you next time. Bye bye.